The legislation refers to a large number of CGT events that are split into different categories. In this clip, we'll look at some of the more common CGT events that relate to creation or start of a CGT asset. Cindy is about to sell her business for $2 million. On top of the sale price, Cindy is paid $300,000 to not open up a new competing business within 5 kilometers of the business being sold for a 3-year period. Cindy paid $2,000 in legal fees to prepare the non-compete agreement. Such an agreement that restricts someone's ability to work or carry on a business is known as a restraint of trade. Although the sale of a business would constitute Cgt Event A1, the restraint of trade would constitute Cgt Event D1. This is because Cindy has created a legal right in another entity. Specifically, Cindy has created a right in the hands of the purchaser of the business. The right that purchaser has is the right to stop Cindy from competing. The timing of Cgt Event D1 is when the contract creating the right is entered into, or if there is no contract when the right is created. When Cgt Event D1 applies, the capital gain is equal to the capital proceeds less the incidental cost of the Cgt event. A capital loss equals the incidental costs less the capital proceeds. Here, Cindy's capital gain would be the $300,000 that she received, less the $2,000 in legal fees, equaling $298,000. Often, when Cgt Event D1 is entered into, the counterparty will experience Cgt Event C2 when the agreement expires. The buyer of Cindy's business, after the 3-year non-compete period expires, will be subject to Cgt Event C2 and will incur a capital loss for paying for the restraint of trade. Linda owns a piece of land. A potential buyer pays her $30,000 in exchange for them having an option to buy the land for $500,000 during the next 3 months. The 3 months pass and the buyer does not exercise the option. Linda would be subject to Cgt Event D2 as she granted an option. The time of Cgt Event D2 is when the option is granted. For Linda, it would be when the potential purchaser and herself both signed the option contract. For Cgt Event D2, the capital gain is the capital proceeds from granting the option, less expenditure in granting it. Linda's capital gain would be the $30,000 premium received, less any expenses incurred in granting the option, such as legal fees. If the buyer had exercised the option and purchased the house, then Linda's gain under Cgt Event D2 would be disregarded, and Cgt Event A1 would apply. The $30,000 option premium would form part of the capital proceeds for the Cgt Event A1. Rose owns office premises that she leases out. She finds a new tenant who enters a 3-year lease with her. Monthly rent is $4,000, and on top of this, the tenant pays her a once-off payment as a lease premium in the amount of $20,000. Rose paid her lawyer $2,000 to prepare the lease. Entering the lease would trigger Cgt Event F1, as Rose is a lessor that has granted the lease. For Rose, the time of Cgt Event F1 would be when the lease contract was entered into. The capital gain under Cgt Event F1 is the capital proceeds from granting the lease in the form of a lease premium less the costs of granting it. Here, the capital gain for Rose would be equal to the $20,000 lump sum premium, less the $2,000 in legal fees, being $18,000. If Rose's initial lease contract allowed a lease renewal at the end of the term, Cgt Event F1 would be triggered upon the renewal. This means that any premium payable upon the renewal will be subject to Cgt Event F1. In the case of long-term leases of at least 50 years, the lessor has the option to elect Cgt Event F2 rather than Cgt Event F1 as applying. In this case, the capital gain is calculated as the capital proceeds less the cost base of the lessor's interest in the land. To recap, there are a number of Cgt events that relate to the creation or start of a Cgt asset. Cgt Event D1 applies when rights are created in another party. Cgt Event D2 applies when an option is granted to another party. Finally, Cgt Event F1 relates to taxing lease premiums.